liabilities is $100 trillion against 6 trillion assets. The USA is bankrupt and insolvent. They are lucky still to be able to print money.
Ladies and gentlemen, another month has passed. Egon von Greyerz is there. Egon, glad to see you again. I don't know where to begin. We of course have to talk about the oil crisis and what might be the implications. But first, good to see you.
Well, good to be with you, Jan. And as you say, there's not a lack of topics to discuss, is there? And I think there'll be more as the months and the next few years progress. So we will have a lot of excitement and not always good, of course, but we're here to try to navigate through this and cope with it and to give good advice.
Absolutely, Egon, that's true. When we spoke the last time, Egon, gold was above 5,000 and silver around 90. A month ago only. A lot happened in the meantime to the precious metals market, of course. I believe what happened now with this Iran oil energy crisis will be a catalyst for the events that we expect. Did those war, Egon, change anything in your assessment relating to precious metals? And what do you think was the cause for the drop in the metals? Less interest, forced selling, something else? What do you think was the reason?
Well, Jana, I look at it from the other end, really. I look at it, we are at the end of a monetary era, as I have explained many times. And for an era to end, there has to be a lot of bad news, a lot of catalysts. And so we're getting one after the other. We're getting wars, we're getting commodity prices, we're getting horrible governments that are absolutely useless as governing their countries, whether it's in Europe or in North America. And we're getting high inflation and, of course, debt exploding. We're near a debt crisis. We are in a debt crisis. Nobody has discovered it yet. And we will obviously have an asset crisis where most bubble assets will crash too. So all of this, wars, inflation, etc., debt, it's part of the end of the monetary era. So it has to happen, basically. So it doesn't change anything from my point of view as regards the precious metals, of course. We are in a major bad trend in the currencies. The currencies have to finish their move to zero. They're down 99% in the last 50 years. So the last 1% is going to happen now in the next few years. It can take several years. We don't know, but it's happening. And of course, that will be reflected. That side will be reflected. Currencies going down, gold and silver and other commodities also going up. Now, they never go straight up. We've been in this market since $300 in a major way, since gold was $300. And it's not been a straight line. And it's unlikely to be a straight line towards the end now either. So therefore, we will see corrections. I mean, I will admit that this last correction was bigger than expected, but it doesn't change anything. I still believe that when it finishes, whether that's in a week's time or a few weeks' time, it doesn't matter. We're still going to go to new highs. And before this is over, gold and silver and many commodities, but especially gold and silver, will go up by multiples. So this correction, I've been through so many corrections for the last 25 years, and I've never worried about them, never sold anything. Our clients are very seldom sell also. So we just ride it out and wait for the next problem to start in the world. And it will be here soon, I promise.
Hang on, let's have a look at a possible cause for the big drop in silver. I presented this to my top news audience already. They found out that an US financial service provider called Jane Street, who became the largest SLV holder in Q4, might be the reason. Let me show this Twitter or X post. Here it is. And this service provider, Egon, was already prosecuted in India and had to pay a large fine for doing something similar. And that means first they bought, in this case, large amounts of SLV, and on the other hand, they had a large option book of puts, and this book of puts, they went into the money and they gave them 10 times the profit, which they lost on the other hand on the physical silver holdings. Physical, that's another question, in SLV. But I think, Egon, the correction was due anyway. We saw this flag moving up, this crazy movement, and it has to come down and to correct. And I think, in my opinion, Egon, and you said it already, this might be one of the rare opportunities for those who are not in this market to get in at really discounted prices before the next rally comes. But that would have been the question, but you answered it already, Egon.
Yes, it's so sad, really, that a lot of investors buy when it goes up and sell when it goes down. No, this is the psychology of investors. You don't, we bought gold 25 years ago and we're still holding it, and we've added a lot since, and the same for our clients. So, the gold is for long-term holding and for long-term wealth preservation, and it'll be a long time before the finances of the world's governments will actually be so sound that you don't need gold when there are no deficits, and when there are no debts, when there's no inflation, and we have stable governments. As I often say, that's the time when elephants will fly also, because it's not going to happen for a very long time. So that's why we have now a guaranteed road ahead of us where metals will continue to reflect the mess in the world. Nothing can change that, sadly. So yeah, the just stay calm, buy when there are opportunities, when it's low. Don't sell at all in the next few years. This bull market or bear market in currencies, they could actually last another 10 years. Who knows? Again, it's not going to be a straight line. It'll go down suddenly and massively, and then it will stay at a lower level for a long time with a few corrections. I could see it, as I said, I could see this continuing for even up to 10 years, this market. But there will be major moves, obviously, in even the short term, in the next year or so, major moves in the metals. So there is plenty of time to also benefit in the medium term, but people should not look at gold as a short or silver as a short-term investment. Look at it as wealth preservation for the longer term.
I agree, Egon. And now let's look at this energy, Iran, Persian Gulf crisis. The US attack on Iran has, in my opinion, Egon, the potential to cause a global crisis with many negative domino effects. Will this war, with all the likely consequences, change your long-term outlook to the precious metals? I think you answered that already. It does not, or does it even strengthen the outlook? Because I think it will be a catalyst to the events. It will make the movement even faster.
Yeah, totally agree with that. That nothing can change this course of events. It's just inevitable. It will all happen. And not exactly the day we want it to, but that doesn't matter. The trend is clear.
The chief of the International Energy Agency recently published a warning, and I think this is now rolled out on a global scale. He said the world is facing an energy crisis more severe than the oil shocks in the 70s and the fallout from Russia's invasion of Ukraine combined. The head of the International Energy Agency has warned, as we see it here, with this warning and with the oil price accelerating, of course, the inflation expectations are rising, and this is causing many domino effects. We have a look at this in a moment, but let's see the expectations first. Here, a good article from Reuters, amazingly free to read. It's raising everywhere. Here, for instance, that's in the US. Expectations higher CPI, higher short-term rates, with the expectations, the short-term rates increasing. And we see already, Egon, in developed economies, Japan, Germany, in the US, the interests are increasing. Not the interest, but the yields. Still, this 5% mark here on the 30-year US bond is an important mark. And if this breaks through, I think it will happen soon, we can expect a faster movement, similar in Japan. But I have picked for you one very special and a dangerous candidate for the Eurozone, and this is Greece. Look what happened here after this Iran war started. Seems we have a new Euro crisis in the cards, a big jump in the 10-year Greece bonds, but it's not only Greece, it's everywhere. With the inflation expectations, the bonds drop in value, the yields increase, and this, I think, is a lot of potential for possible gold and other precious metals buying.
Yeah, and we had a 40-year downtrend in interest rates since the early 1980s. And they bottomed around 2020, 21. Now, the uptrend is very clear, and this is not going to be a short-term uptrend, because again, this is, you combine this with the inflation we're looking at, with the money printing, high rates are inevitable here. And I think they're going to be at least as high as in the 1970s, early 80s, which was in the high teens. And if we get a collapse of the sovereign bond market in many nations, including the US, which is basically bankrupt, and I've just looked at some figures, with the balance sheet of the US they have assets of about $6 trillion, and they have liabilities of $45 trillion. But if you add to that unfunded liabilities, the total liabilities is $100 trillion against $6 trillion assets. The USA is bankrupt and insolvent. They are lucky still to be able to print money based on the dollar being a reserve currency. That's not going to last long because the end of this crisis will mean that currencies like the dollar, the euro, and many others will collapse. And the consequence of that is, of course, if they want to borrow money ever, they will have to issue bonds at rates of 20%, 25%, or even higher, and the market will also push them up to those levels. So we're entering a very, very precarious situation for the world economy here and the world financial system. And of course, we talk about inflation and oil and gas and commodity prices, but just you take, for example, fertilizers. Fertilizers a lot of fertilizers that come from oil. A lot of fertilizers are also made come from Ukraine, and there's going to be a massive shortage of fertilizers, pushing food prices up dramatically. So you can think about, what we will face here and what ordinary people will face will high energy prices, high food prices, and of course, generally commodity prices going up dramatically in the next few years. It's going to be a disaster that will be hard for the world to cope with in an orderly fashion.
Absolutely, Egon, and that was the reason why we recommended to buy your precious metals as soon as you can afford, because for Joe Sixpack, the time will come where he still cannot afford any precious metal to buy because everything is absorbed by his daily expenses. But let me come to another important player in the market, and this is private equity. We also spoke about that several times in the past, Egon, even last month. And now we have the next candidate who is reducing or even blocking the payouts. So this is a domino effect that forces big investors to sell assets. Moody's Ratings downgraded a private credit fund by KRR and Future Standard to junk amid rising bad loans and a string of weak earnings. And KRR is not the only private equity company in turmoils. There are others, and I even found an article in the Börsenzeitung. I will link it below the video, that shows that private equity companies are really in trouble. Even Blackstone, BlackRock, by the way, why is everything black with them? So they are really in trouble, and this will take with them into the maelstrom also, I think, the stock market. The stock market is still amazingly resilient. Who knows why? But I think, and as you also predicted, Egon, this will see a big drop very soon.
Yes, because this is a function of a bubble system, whereby companies like KKR or BlackRock are buying companies at a relatively low price, then leveraging them up massively with loans, hoping to sell them a few years later at a profit. And that game has worked because it works, of course, as long as the stock market goes up. And the stock market has been going up for a very long time. But that's come to an end now. In my view, stock market has topped, or markets worldwide have topped. And we are going to see a very long-term downtrend that will contain also crashes. Whether we will have a crash in the short term or not, it doesn't matter. The long-term trend of stock markets are massively down. The bubbles are now going to burst. And of course, these private equity companies can then not sell the shares in these companies because, as I said, it's totally dependent on a rising market. So this is why, I've been saying that for years, private equity will collapse. And so, which we have talked about also, will private credit. It's the same system. Companies financing private credit business or companies, basically they borrow cheaply from the system and then they leverage it up and then they get a much higher return on the money, a leveraged return. That's also going to fail. And of course, linked to that will be that the banking system, especially in the US, which is financing a lot of these leveraged transactions, that will fail too. Maybe totally or maybe only partially, but at best, it will just be massive money printing and the value of money collapsing, and with high interest rates, of course. So it's a dire situation we're looking at for the world, Jan. People should stay away from all of these speculative instruments and stick to hard assets, stick to silver and gold, little bit, energy, uranium, other commodities, etc. But the real wealth preservation assets are, of course, physical gold and silver.
And you gave me a keyword, money printing. The states become more creative to get more money. And I read that France is reevaluating the gold reserves to raise value, to get money, book value out, to pay for obligations. And Turkey even considers selling some of their really pretty large gold holdings to support the lira. What kind of a game is that, Egon? I remember from history lessons in the early 20s, the Reichsbank in Germany tried something similar to sell gold to support the mark. It is a fool's game. It will be lost anyway, but it shows that the national states are really played into the edge.
Absolutely. And what they're doing is just borrowing more money, debasing the currency. And if they then sell their gold, then they have no backup. They have no reserves to back a falling currency. So it becomes a vicious circle. And then we're going to see many of those, Jan. And there will also be a lot of scandals. People will discover that, as you talked about this James Street, for example, before, with the derivatives position in silver. You will find that there'll be so much fraud and so much going on behind the scenes that will be unraveled once the problems start, and that will exacerbate the downturn of markets, of credit, and of the financial system. So that's what we're going to see in the next few years. If you're not prepared and you should stick to the conventional investments like stock markets or bonds, you will be slaughtered, totally slaughtered. So it's a time now still to protect yourself, and investors should take heed and do that as soon as possible by having physical assets like gold and silver and holding them outside the banking system. So it's very simple. It's always at the end of an era, precious metals are always saved the people who held them, but the majority have lost all they have because of the collapse of conventional markets and investments.
You can preach like a preacher in the desert, Egon, as we do, but we still continue to do that. Although we only reach a small number of people nevertheless. But Egon, I have something very special as a final point for today. The viewers will see it in the video. Here is a post from Dominic Kettner, and he shows that there are large bets on high prices by December on gold options. What do you think? Is there somebody in the know again? Like somebody also knew what Trump would say about negotiations and suddenly oil dropped by $10? Is this a hint? But we hold our gold anyway. It's
Yes, well, I don't think anybody knows anything, but people clearly expect things to turn worse, and to take a 8-10 months view on that is probably not a safe bet, but a good bet. But of course, the strike prices are very high here, and I think they were up to 20,000. But of course, people buy a lot of options at a very cheap price, and with a high strike price. Remember, the price of gold is now 4,500. You're talking about here, they're hoping to buy it at $20,000, but they won't. Because you pay nothing for these very cheap options, and then if the price goes up by very much, but a few $1,000s, they will sell, and they have doubled or trebled their money. I mean, that's the way they look at it. So there's massive leverage and massive speculation. It might pay off, or it might not, but nevertheless, the direction is right. Definitely, those options are going to be worth more than they are today, as long as it happens before the end of the year, of course, when they expire.
That was the final statement, Egon. I can only encourage our viewers to use this correction if they do not have enough precious metals already. Prepare not just with precious metals. Everything will become more expensive. This oil price and energy increase will have the domino effects. Everything will increase in price. So get your stuff now. Thanks, Egon, for today. Stay in best health, and then who knows what we have to discuss next month. Thank you.
Thank you, Jan. Thank you.
Thank you. Auf Wiederluge. Bye bye.
Wiederluge.